Hi everyone, IGCC Accounting. Today's topic is how to correct profit if errors are there. Let us discuss a question. There had been four errors in the ledger account of K debits found on 31st March 2016. Their correction can now be seen. Assume that the net difference had also been $80 on the debit side of the trial balance. The difference is $80 on the debit side of the trial balance. So, in the suspense account, difference in trial balance will appear on debit side 80. The first error, sales overcast by 90. This error we have to correct it. Debit sales and credit is suspense. Why sales is debited? Because sales has credit balance. If it is overcast, you have to write opposite because in order to reduce from the sales account. And B, insurance undercast by 40. Insurance is expense has debit balance. So here undercast only, the ledger account insurance is less amount is shown. So you have to add to the insurance account. So insurance account debited and credited is suspense account. C, cash received from the trade credit customer entered in the cash book only 50. So cash received, bank of cash debited only. That entry is correct according to the question, and which is received from the credit customer. So here customer name is not given. In that case, we can write trade receivable, and credit entry is trade receivable only, and the debit entry is suspend because the debit entry is correct. Since it is correct, we have to debit with the suspense, and credit is trade receivable account. So a credit purchase of $59 is entered in the book. Debit and credit entries as 95. This is both side debit and credit side is entered 95. This is overcasted both purchase account and even uh, trade payable account. So both debit and credit. This error is called a error of original entry only. It is not affecting uh, the suspense account because this error is not affecting trial balance. So let us see the answers. It will appear in the journal. The first one, sales overcasted. In that case, we have to write sales account debit and credit is suspense account because sales is overcasted. In order to reduce from the sales account, we have to debit sales. Sales has credit balance only, but here we have to debit because in order to reduce the $90 from the sales account. So narratives also required in some questions. So we have to write narratives. Debit is insurance. Insurance account was undercasted. Insurance debit, and the credit is suspense. Narratives insurance expense undercast by 40. And third one is suspense account debit 50, and the credit is trade receivable. Here, cash account was correct, and only trade receivable account is not entered. Trade receivables account was omitted from the book. Last one, trade payable account debit and credit is purchase only because both was overcasted. Trade payable and purchase account also 36 was the difference. So in order to reduce from the purchase account is credited, and to reduce trade payable account, payable account is debited. Here we have to pay a suspense account. The difference in trial balance already given in the question 80. So all the if suspense account is debited, we have to write the for reference trade receivable 50, and if suspense account is credited, so sales is for reference we have to write sales on credit side 90 and insurance 40. So here we can see that both sides are equal, and 130 and 130. So now we have to correct the profit. Here we know that some errors are there, and the draft profit is given in this question. This is a draft profit. Profit is 52,030. The first one, how to correct it? That is, sales account was overcasted. So sales is overcasted means total profit also will be overcasted. So in order to reduce the profit, decrease the profit, we have to write under the decrease the profit. We have to decrease 90 from the draft profit. And expense account or insurance account undercast only. So in that case, expense is undercasted. So what would happen? Profit would be overstated. In that case, we have to reduce from the profit. Draft profit. Profit is now overstated 40 because of this transaction. Now we have to subtract from the profit or decrease in profit. The next one is purchase account is overcasted. Purchase is overcasted. So total cost of sales overcasted. So what would happen? The total profit is undercasted because of this. So we have to add to the profit. So here we can see that 36 increase in profit and decreasing from 130. The difference only we have to write here. Difference is 94. See here, decreasing minus figure, increase plus figure. The difference is for 94, and we have to subtract 94 from 52,030. That is corrected profit for the year is 51,936. So in another way, we can do this. If students are feeling difficulty to identify increase or decrease in profit, there is a shortcut method that I used to teach the students. So if suppose uh, an income statement item is debited, irrespective of income or expenditure, if income statement item is debited, decrease the profit. If income statement item is credited, increase the profit. In that way, also you can study the increase or decrease of the profit. Once again, if income statement item is debited, it can be expense or income, irrespective of anything, income or expense. Debited, decrease the profit. If income statement item credited, decrease the profit. In that way, we can easily we can identify, and we can write and we can make a correct profit. Thank you.